Are you aware there are assets that can give you better returns than cash? A question that might have caught you off guard, but it's an important one to ponder. In today's world, it's not enough to simply save. Your hard-earned money must work for you. That's where the concept of assets comes into play. They are the knights in shining armor, potentially yielding returns that could dwarf the modest interest provided by your cash in the bank. Let's break it down. Assets, in essence, are resources with economic value. They can be anything from stocks, bonds, and real estate to mutual funds, or even gold. The beauty of these assets is that they have the potential to increase in value over time, providing you with a return on your investment. Think of it this way. Imagine a world where you are the king or queen of your financial kingdom. Your assets are your loyal subjects, working tirelessly day and night to increase your wealth. But, as with any kingdom, diversity is strength. This is where the concept of diversifying your investments comes into play. Having a variety of assets in your portfolio is akin to having an army with different types of soldiers, each with their unique strengths, ready to battle the unpredictable financial market. But remember, with great power comes great responsibility. Different types of assets come with their unique risks. Some might offer potentially higher returns but come with a higher risk, while others might offer steady but slower growth. The key is to strike a balance, to manage risk while maximizing returns. So the question isn't just about having assets, but rather which assets to choose. And that's where we come in. We're here to help you navigate the complex world of financial assets, to help you make informed decisions. In this journey, we'll explore the top 10 assets that have the potential to offer better returns than cash, each with its unique features, benefits, and potential risks. We'll delve into the world of stocks, bonds, real estate, and much more. Stay tuned as we delve into the top 10 assets that can provide you with a better return on your investment. It's time to unlock the power of assets and let your money work for you. Let's embark on this journey together. Scene script. First up on our list, stocks. So, what are stocks exactly? They're essentially a slice of ownership in a company. When you purchase a stock, you're buying a piece of that company's future profits and growth. It's like being a silent business partner, reaping the benefits without doing the heavy lifting. Stocks work in two principal ways: dividends and capital appreciation. Dividends are a portion of the company's earnings distributed to shareholders, typically on a quarterly basis. Capital appreciation, on the other hand, occurs when the stock's price rises above your purchase price, leading to a profit when you sell. Now, stocks hold the potential for high returns, but it's important to remember that they also come with risks. Market volatility can lead to fluctuations in stock prices, and poor company performance can result in losses. But with strategic planning and careful selection, stocks can offer significant rewards. Investing in stocks can be a strategic way to grow your wealth. Scene script. Second on our list, bonds. Now, picture bonds as IOU notes from companies or governments. In essence, when you purchase a bond, you're lending money to these entities in return for a promise of interest payments and the return of the principal amount at the end of a specified period. This makes bonds a fabulous tool for generating steady returns. However, like all investments, bonds aren't without their risks. The key risk is the issuer defaulting, that is, failing to pay interest or return the principal amount. Therefore, it's crucial to consider the creditworthiness of the issuer when investing in bonds. But here's the real magic of bonds. They often move in the opposite direction to stocks, balancing out the volatility of your portfolio. When stocks fall, bonds tend to rise, and vice versa. This complementary relationship makes bonds a vital component of a well-rounded portfolio. Bonds can provide a steady stream of income for investors. Third on our list, real estate. The age-old adage, safe as houses, couldn't be more accurate. Investing in real estate is like holding a piece of the world in your hands, a tangible asset that you can see, touch, and even live in. While stocks and bonds are subject to the whims of the market, real estate often appreciates over time, providing a steady return on your investment. Yet, as with any investment, real estate is not without its risks. Market fluctuations, property maintenance, and tenant issues can all nibble away at your profit margins. Therefore, it's crucial to do your homework. Research the market, understand the location, and be aware of your financial commitments. Remember, real estate isn't just about buying a house or a plot of land. It's about investing in a future income stream, a nest egg for your retirement, or a legacy for your loved ones. Real estate can be a tangible way to increase your wealth. Fourth on our list, mutual funds. Now, here's an asset that packs a punch. Mutual funds have long been a favorite of investors, and for good reason. Imagine being able to invest in a broad array of stocks, bonds, or other securities, all in one fell swoop. That's the power of mutual funds. It's like getting a tasting platter of the investment world. Each fund has a specific investment strategy, managed by experts who make decisions based on research and analysis. But remember, with great power comes great responsibility. Mutual funds, while offering diversification, also come with their own set of risks. Market volatility can impact fund values, and fees can eat into your returns. That being said, if you're looking for a way to spread your investment across a range of different securities, mutual funds could be your ticket. Mutual funds can offer a diversified portfolio with a single investment. Fifth on our list, exchange-traded funds, or ETFs. These are investment funds traded on stock exchanges, much like individual stocks. They are designed to track the performance of a specific index, sector, commodity, or asset. This means when you buy an ETF, you're buying a piece of the entire market it represents, rather than just one company's stock. One of the main benefits of ETFs is their inherent diversification. By spreading your investment across a wide range of assets, you reduce the risk associated with putting all your eggs in one basket. Another advantage is liquidity. Since ETFs are traded like stocks, you can buy and sell shares throughout the trading day at fluctuating prices. However, while ETFs offer many benefits, they're not without risk. Like any investment, they can decrease in value. It's essential to understand the specific ETF and the market it tracks before investing. ETFs can provide a way to diversify your portfolio while maintaining liquidity. Sixth on our list, cryptocurrencies. These digital assets have been making waves in the financial world, offering a fresh take on what we understand as currency. Born from the digital age, cryptocurrencies like Bitcoin and Ethereum have become the new gold rush, with potential for high returns that are hard to ignore. Yet, with great potential comes great risk. The volatile nature of these digital assets makes them a rollercoaster ride for investors. One moment you're on top of the world, the next you're plummeting to the depths. This is largely due to the fact that cryptocurrencies are not tied to any physical assets or governmental regulation. But it's this very freedom from traditional financial systems that makes cryptocurrencies so appealing. They represent a new frontier in investment opportunities, a realm unbound by geographical borders or banking hours. And that's the thrill of it all. Cryptocurrencies offer a new frontier in investment opportunities. Seventh on our list, commodities. Now, what are commodities, you ask? Well, commodities are raw materials or primary agricultural products that can be bought and sold, such as gold, oil, or wheat. They have an intrinsic value, meaning they hold their worth irrespective of financial markets. This is what makes them an attractive asset for many investors. You see, commodities can offer significant profit potential. When demand outstrips supply, prices can skyrocket, creating lucrative opportunities for those in the right place at the right time. But it's not all sunshine and roses. Trading in commodities can be risky. Prices can be volatile, influenced by factors such as weather, geopolitical tensions, and economic indicators. Despite these risks, commodities remain a valuable part of a well-rounded investment portfolio. They can provide a hedge against inflation, maintaining their worth even as the cost of goods and services increases. So commodities can provide a hedge against inflation and diversify your portfolio. Eighth on our list, index funds. Now, these are a type of mutual fund with a portfolio constructed to match or track the components of a market index. They provide broad market exposure, low operating expenses, and low portfolio turnover. Think of them as a mirror to the market. If the market does well, so does your index fund, and vice versa. They're designed to keep up with the overall market, not to outperform it. The beauty of these funds is their simplicity. You're not trying to beat the market or rely on someone else to do so. You're simply participating in its ups and downs. Because of this, they require less management, which often results in lower fees. But remember, as with all investments, there are risks. An economic downturn can affect the entire market and consequently your index fund. Despite these risks, for many, the appeal of index funds is their potential for steady long-term growth. Index funds can offer a passive investment strategy with potential for steady growth. And ninth on our list, gold. This precious metal has been the symbol of wealth and prosperity for thousands of years. But it's more than just a shiny object for your jewelry box. Gold is a tangible asset that you can hold in your hand, and its value has been recognized across the globe. Now you might be thinking, gold? Really, isn't that a bit old-fashioned? Yes, it might seem that way, but consider this. Gold has maintained its value over centuries, even during economic downturns. It's a hedge against inflation, and it's a fantastic way to diversify your investment portfolio. However, like any investment, gold comes with its own set of risks. Prices can fluctuate based on a variety of factors, including geopolitical events and market demand. So, while gold can provide stability, it's not a guaranteed profit maker. But let's not forget, gold has long been viewed as a safe haven in times of economic uncertainty. Last but not least, on our list, peer-to-peer lending. Peer-to-peer lending, often abbreviated as P2P lending, is a fascinating method that allows individuals to lend and borrow money directly from each other without the intermediation of a traditional financial institution. It's a bit like an online matchmaking service, but instead of love, we're talking about loans. This form of lending has the potential for high returns. Lenders can enjoy interest rates that often surpass those offered by banks, making P2P lending a potentially lucrative asset to consider. However, like any investment, P2P lending is not without its risks. The most significant of these is default risk, where borrowers may fail to repay their loans. Unlike bank deposits, P2P loans are not insured. Hence, the importance of diversification and due diligence cannot be overstated. Despite these risks, the allure of higher returns and the democratization of lending and borrowing make P2P lending a compelling option. Peer-to-peer lending can offer an alternative to traditional banking investments. So there you have it, the top 10 assets that can provide better returns than cash. Let's do a quick recap. Stocks, the classic choice for many, offer potential for high returns, but remember, the risk is equally high. Bonds, on the other hand, are a safer bet with lower returns, but they are steady and reliable. Real estate is a tangible asset that not only appreciates over time, but can also provide a steady income if rented out. Mutual funds are a great option for those who prefer to leave the complexities of investing to the professionals. Exchange-traded funds, or ETFs, provide a blend of the benefits of both stocks and mutual funds and are a fantastic option for diversification. Cryptocurrencies, the new kid on the block, are highly volatile, but with high risk comes the potential for high rewards. Commodities like oil, gas, and agricultural products are a time-tested asset class, though they do require a certain level of expertise. Index funds offer a low-cost way to invest in the performance of an entire market index. Gold, an age-old safe haven, can act as a hedge against inflation and currency fluctuations. Lastly, peer-to-peer lending is an innovative way to earn interest on your money by lending it to individuals or small businesses. But remember, the key here is not to put all your eggs in one basket. Diversifying your portfolio across these various asset classes can help you spread your risk and potentially enhance your returns. It's also vital to understand the risks associated with each type of asset and to invest only in what you understand. Investment is not a one-size-fits-all strategy. It's a journey that requires patience, knowledge, and understanding of your own risk tolerance. Your portfolio should reflect your financial goals, risk tolerance, and investment horizon. Remember, the key to successful investing is diversification and understanding your own risk tolerance. Happy investing!